Uh, I want to first start with season's greetings. Okay, stock is down. We'll talk about it, but it's Diwali time, so at least start with a smile on your face.
Thank you, Nakunj. Good morning and happy Diwali to you and your team.
The shareholders are saying that it's not turning out to be a happy Diwali for them. The numbers have disappointed on all the front.
Nakunj, you have to see the numbers a bit more in detail. If we go back to the numbers and see the numbers, of course there is a drop in our NIMs. We are at 4.08 against our 4.25. There is a 17 basis point drop. There's a significant drop, but please understand we slowed down on unsecured business, which actually grew negative 6% quarter on quarter, and we grew the secured business, which grew 4% quarter on quarter. As a consequence, microfinance business, which is about 10% of our book, which has a yield which is 12% higher than the thing, we lost about 12 basis point to 13 basis point NIM in the microfinance business itself. The second point which we have to take, we've always said granularization of liabilities is critical for us. We continue to focus on granularization of liabilities, and we did not stop the liability growth and granularization, and as a consequence, we grew in a very tough quarter, 4% quarter on quarter and 16% year on year in our retail deposits. And we could have slowed down that growth and saved some, and the LDR could have remained at 87, 88. We went down to 86%. And I think that's a cautious call which we took. In our opinion, I think the stability of the balance sheet and the prudence is much more important at this point of time than just showing growth. We want to show growth, but we want to be cautiously optimistic in showing our growth. There is fundamentally nothing wrong with the balance sheet and our growth.
Appreciate that, but if I compare your commentary of last quarter versus now, nobody saw this kind of an caution coming. So in 90 days, which is what we are talking about, what has changed for you to, in a sense, come up with prudent provisioning?
Okay, provisioning is a separate issue. I've always thought that fortification of balance sheet is very important. I was seeing stress emerging in microfinance, and it's reflected in our results. And I thought it's very prudent right now to create a contingency provision and keep it aside. You may not require it, you may not use it, but it's prudent that having a contingency provision and keeping it aside for bad times is a very, very good way of running a bank which has a cyclical portfolios of like ours. And I think getting a 2.2% of a book of loans as provisions is a very, very conservative view to take on the balance sheet.